Well, if you haven't noticed, the stock market has been acting a bit crazy out there today. A lot of this obviously comes down to the Trump tariff policy. He said they were here to stay. Then he suddenly hit pause on that. He told the public one day that there would be no delay. Then out of nowhere, the next day, he gives a 90-day pause. So what changed? What caused him to make that rather drastic move? I don't think it was just politics. I don't think it was just pressure from businesses, like a lot of people are saying. I think that the real push likely came from something that most people don't even pay attention to, and that is the bond market. Everybody watches the stock market. It's flashy. It moves fast, gets all of the headlines. That's the first thing we see on our screens in the morning. But the bond market, it's a lot quieter. It's sort of slower. It's not as sexy, you might say, as the stock market itself. And that's probably why a lot of people just ignore it. But one thing I want to talk about here, when it comes to predicting the real economic troubles out there, the bond market is often the first to know. It doesn't react emotionally like the stock market does. It reflects more long-term expectations. And in this case, it was the flashing signs that we saw from the bond market that I think had the potential to actually derail the economy. So I want to back up just for a second here and cover off what I'm talking about. So as I mentioned, Trump was sticking to his tariff policy. He said there would be no changes. He said there would be no delays. But then last week, he suddenly reversed course. He gave that now famous 90-day suspension. Markets went nuts. Business leaders all, welcomed the move out there. But underneath all of that, underneath all that movement, the bond prices were telling a different story. And that is probably ultimately what got Trump's attention, because if the bond market is slowing down, tariffs are adding to the uncertainty. In other words, not suspending the tariffs, then if they just held firm, that would have triggered something worse. And it was the potential for a full-blown panic. I think we saw some beginning signs about that. And I want to talk about something else just for a second here. As I mentioned, everyone watches the stock market. That's where the drama is. But the bond market is the one that's actually sort of doing the homework. It's doing the numbers, crunching the numbers behind the scene. And it's made up of investors who are placing long-term bets on things like growth, inflation, interest rates. Basically, where is the economy headed? And while the stock market is more reactive and emotional, the bond market is definitely more grounded. And when the bonds started sending that signal, that's not based on the headlines, it's based on a real concern about where the economy is going. Last week, that concern kind of grew to a point where the White House really had no choice but to act on that. This is the kind of pressure that doesn't come from the polls. It doesn't come from press conferences. It comes from the mechanics of the market itself. And I would say that Trump's 90-day pause was probably less about diplomacy, probably more about damage control, kind of trying to settle the nerves out there, calm things down, and avoiding triggering even a larger economic chain reaction. Bottom line, the bond market gave the signal and Trump responded. And I will admit, it's hard to know exactly what happened in the background, all the discussions behind the scenes, but the timing sort of makes it clear to me that the market signals played a pretty big role. Now, is the bond market something that we should all be paying attention to? Is it something that you would pay attention to? Please let me know in the comments below. Now, before I move on to my next story, a quick shout out to Blossom Social, which is absolutely on fire right now. The first 2 hours of their fundraiser this morning, as of the time I'm filming it, they've raised over $760,000. They've passed over $1.75 million in the entire fundraising at Front Funder. Now, I know that's going to change before I'm even finished recording this video, but hey, I've got to do this here. So if you're not familiar with Blossom, there's over 250,000 investors who are already using the app to share portfolios, track their performance, learn from each other, and it even made Apple's top 25 apps for 2025. If you are not on the Blossom app yet, now is the time. There's a lot of big things happening there. Download it today. I will put a link in the description of this video. Now, I want to move on to the next story here. Meta is about to face one of the biggest legal challenges it's ever had. Federal antitrust trial is kicking off this week. Now, the Federal Trade Commission, the FTC, it's accusing Meta of social networking monopoly, and they're saying that because they had a lot of anti-competitive moves, and specifically they cite past acquisitions of Instagram and WhatsApp. And if the judge in this case rules against Meta, the company could be forced to split up. I know there's always chatter about that. If this did happen here, then it would set obviously a precedent for how all the other tech giants are treated as well. Now, this case, it's being heard by Judge James Boasberg, and he has previously ruled against Meta's efforts to dismiss the lawsuit. And he has also been in the news lately because he's been attacked by Donald Trump, who called him a radical left lunatic. And there's most of the legal scholars out there will say that his history has shown a pretty nonpartisan reputation, but that's where we're at. Now, the FTC had originally filed this case during Trump's first term, term. That was thrown out. But then when Biden was in power under his leadership, they came back with even a stronger complaint. Now, Mark Zuckerberg, he has been reportedly working behind the scenes to see what he can do to influence the outcome here. On April 2nd, he was seen at the White House. And the same day, reports sort of came out that he was lobbying Trump to help settle the case. Now, he told Meta staff, "We now have an opportunity to have a productive partnership with the United States government, and we're going to take that." Now, Robert Reich, he is a vocal critic of Meta, and he says, "Remember how Mark Zuckerberg started cozying up to Trump as Meta donated $1 million to his inauguration? Well, now Zuckerberg is trying to cash in, reportedly lobbying Trump to settle the FTC's antitrust case against Meta." Now, meanwhile, and related to this case here, is that Trump recently fired 2 Democratic FTC commissioners. And this came even though the Supreme Court had ruled saying that presidents cannot do that without cause. Now, one of the fired commissioners, Rebecca Slaughter, she said on CNN, "Our laws need to be enforced without fear or favor." And she warns that the president has been very clear about directing law enforcement to target his enemies and favor his allies. Now, in this case, some have suggested that Trump may tell the FTC to drop the case in light of, Zuckerberg's recently cozying up to him. Trump's new appointee, Andrew Ferguson, he's preparing to lead the FTC into trial, and he said that he would follow any lawful orders that come from Trump. And as far as speaking directly to Trump telling him to drop the case, he says, "I think that the president recognizes that we've got to enforce the laws, so I'd be very surprised if anything like that ever happened." Now, as for Meta, the company spokesperson said, "Regulators should be supporting American innovation rather than seeking to break up a great American company and further advantaging China on critical issues like AI." Now, my last story for this episode today is just about the Bank of Canada, and they're heading into a pretty critical interest rate decision this week. And they find themselves caught between rising inflation, 2.6% last month, and a new report coming out tomorrow, and a slowing economy, as you can see by this chart here. Now, as you're probably not shocked, a major sort of wild card here is President Trump's erratic trade policy that has definitely complicated Canada's economic forecast. The Bank of Canada Governor Tiff Macklem, he has said, "We need to set policy that minimizes the risk. That means being less forward-looking than normal until the situation is clearer, and it may mean acting quickly when things crystallize." The bank is also contending with conflicting data. You look at GDP, that is sort of surprised to the upside a little bit, but the job numbers, they've slumped. Consumer sentiment has fallen. And you think about what former Bank of Canada Governor David Dodge says. He summed everything up, and he says the problem is they've got a slowing economy in the United States. They've got a slowing economy in the world, and they have slowing domestic economy, all of which would indicate that you would go at least to the bottom end of what you think is the neutral range on interest rates. Now, as of today, the interest rate swap markets, they are sort of reflecting this uncertainty. They're showing about a 60% chance that the bank will hold rates and about a 40% chance of cuts. Analysts are saying that the bank may look more at backward-looking data for now, and that would make a pause more likely than another cut. That is a wrap for today's show. Again, if you're not on the Blossom app, I will put the QR code right on this screen. You can join the fun there. As always, thank you for watching, and we'll see you in the next video.